So we're pretty much back with another one. We're gonna go over how I executed today and how you actually could have made money just like I did. Now you're probably wondering, he's literally showing us a losing trade. Why is he gonna say make money? Well, let me just take this off. Um, Actually, I took two trades. That's why. Funny enough, they're both on the same pair, and it's just funny how the trade that did stop me out, it wasn't even my first intended trade. I ended up taking the trade that I did want to take. But so in essence, this is what happened going into the day, right? And if you do find this educational, make sure to follow and subscribe. And also join the Discord. It's free. I pretty much send all of this stuff for free out live. I mean, you can use that for yourself at least, and more importantly, you can get on free calls with me. Um, so in essence, daily time frame is actually bullish on gold. And with that knowledge, I'm just thinking, sure, we'll probably expand, especially with the current status of like the world economies and stuff like that. We have lots of reason to expand on higher with this current uncertainty. Uh, so with that being said, I'm just looking at the lower time frames to go ahead and validate that bias. So daily is bullish. The 4 hour, I waited. Well, initially I didn't wait. Honestly, I was under the impression that yep, we never broke structure to the downside on the 4 hour. We just had a bullish break of structure, came back, mitigated some form of demand, and head on higher. So in my brain, I'm thinking, cool. I'm good to go on the 4 hour. I'm good to go on the daily time frame. Really, all you need to do at this point is validate that you're good to go on the lower time frames, like the hourly, the 15, and so on and so forth. So the hourly here is clearly bullish, right? But as you can see, we had an expansionary move to the upside, and we did not have a retracement at that point, meaning at New York Open, which is this candle right here. So I'm looking at this thinking, okay, I'd just like to see a retracement back down to fill some the type of imbalances or demand zones that have been here, or the order block right here, stuff like that. And I'm just waiting for that to get filled, right? So at that point, I'm also like the hourly is still bullish, the 4 hours bullish, and the daily is bullish. So let's scale down to the 15 and find optimal areas that I could actually look to enter a trade. So whenever I scale down into these trades, I also look to see if price has been pricing efficiently. The reason why I said retracement is because on the hourly, it looked like price had not been priced efficiently, meaning you did not see that many wicks, were just straight expansions, meaning that there were lots of imbalances most likely that have yet to be filled, or price was just leaving lots of demand zones untapped, stuff like that. Um, with that being said, I saw this extension and said, cool, this is about 50. Let me see what if we actually retrace 50% anytime during this extension. And really, I didn't see that. I knew that we hadn't retraced 50% just yet, but I did know that the 15-minute was still bullish. So what I did was I scaled down to see if we really had retraced or not. So this is where I actually ended up taking this trade. So initially, I'm thinking to myself, boom, this is New York Open around here. New York Open around here. So yeah, there still was no sign of a 50% or equilibrium-based retracement. So I'm thinking to myself, oh, perfect. Look at this untapped demand. That's perfectly in line with the 50/61.8, right? So I'm like, cool. This is a great area that I'll be on the lookout for. Most likely, I'll probably look to execute within here because of the fact that the previous demand executed within, and then the other one is pretty much just going to be the decision, the extreme. This would be the decisional for that break of structure that we just had, because on the 4 hour we just broke structure. Remember that. And on the hourly and on the lower time frame, we also have this final demand here that has yet to be mitigated. That's the extreme. So what happened and why did I execute here is probably what you're wondering. So in short words, when I saw this happen and I saw this liquidity sweep right here on the 5 minute, I anticipated that we'd head on higher because of that fact. Because of the fact that we mitigated this fair value gap and then swept liquidity and failed to break 5 minute structure, which led me to believe that, oh, I might have done these equilibrium calculations wrong. So I just checked back again and did them again. And the way I did it now had, I guess, that bias within my mental. So I drew this up from here, I believe, and said, oh, that was really close to the 50% mark. And then I said, oh, this was also just on the 50% mark. Maybe we actually did do our full retracements. Maybe we're just ready to go higher. See, with that being said, I just scaled down to the lower time frames, got my entry confirmation, meaning the break of structure right here, and I pretty much entered. Price moves a little bit, proceeded to go down into our zone. At which point, I waited for our zone because that was pretty much the only place I was willing to execute